Today on CNBC, Mike Novogratz went on and had a number of really great points. But one of the things that he said that I found really interesting was he specifically talked about the idea of Bitcoin having won the monetary asset race. Bitcoin has become that digital gold, that secure store of value on a global stage. Then he talked about other technologies are now competing for who is going to win on the technology platform side. So we're going to play this video from Squawk Box this morning where Mike's talking about it, and then we'll explain a little bit deeper about what exactly he's saying here.
We have people wanting us to mention this coin, this asset, that asset. And it's hard to even keep track at this point, Mike. And what are we supposed to think about that? These aren't all Bitcoins. Not all of them have the future of Bitcoin. Is it the wild, wild west? And does it remind you of pets.com? I mean, are some of these things going to hurt people?
I think you need to be pretty careful. The simplest way I break it up is Bitcoin as digital gold. I think it's won that lane. I think it will continue to be adopted and it will take more and more of gold's market cap. Right now, it's about 12% of gold. I think it'll get to 100% over a few years. And so Bitcoin's got its own lane. Then kind of Ethereum, Solana, Luna, Cosmos, Algorand, all of those are vying to be part of the technology play, the blockchain where things get processed, right? And so we call those level one solutions. Those are really technology bets. And we invest in them based on adoption. How many people are using them? How good is the product? How good is the community? And then the third bucket is stuff built on top. And so this has gone from being just a macro trade, right? Go long assets to kind of a long short equity trade as well. Pick the right protocols, and have a methodology on why you think some things are going to be better than others. And so it is, it's not for the faint of heart because there's a high volatility asset class because it's so new. But it's also, my advice would be stay simple unless you've got a whole lot of time and expertise to understand the difference between one coin and the next.
So when we look at this right here, he's explicitly saying that one, Bitcoin has won the monetary asset. It basically has become that global store of value. Bitcoin is money. And when you have a store of value and a medium of exchange, you win that category. But all of these other assets, he's explicitly saying, is not competing to be money. Nobody is sitting at a central bank somewhere or at an institution and saying, you know what, we need to have an inflation hedge, and therefore we should actually not buy gold or we should not sit in treasuries. Instead, we should go buy one of the long tail assets. Nobody's saying that. And so Mike very explicitly here is saying that everyone is looking at Bitcoin as the winner in that monetary asset category. But again, all of the other assets are vying to be part of the technology play. And many of them are not going to work. Some of them will work. The market will determine who wins and who loses. But I think it's important to separate out and have this idea of decoupling. Bitcoin is separating itself from what it's going after versus many of the other technologies. On top of that, Bitcoin is actually also separating itself and continuing to show that it's non-correlated to traditional assets as well. So stock market down, Bitcoin up, ends up being actually a very positive thing. The more decoupled we can get, both Bitcoin being decoupled from things going after the technology platforms, but also Bitcoin decoupling itself from the traditional assets, ends up being a positive. The more non-correlation, the better, because what it does is it provides very specific kind of criteria for an investment portfolio, but also it means that Bitcoin will move from a US dollar exchange price based on different variables. It won't just be susceptible to interest rates or GDP or any of those types of kind of more traditional movers of prices. And so when we look at this, how accurate do we think Mike's perspective is? And is this a good development or is this something we should be concerned about in the industry?
Concerned about what part of it?
The separation between Bitcoin as kind of going after the monetary asset versus the technology platforms.
Yeah, I think it's fine to separate them. I don't have a problem with that. I think his, when you hear him and other people kind of industry leaders talk about what Bitcoin can be, right? I think the safe thing, to be honest, it sounds kind of crazy to say, but the safe thing is to revert back to it eclipsing gold's market cap, right? And just becoming the digital gold, right? And if you look at it, I think he said it was 12% of gold's market cap right now. 10x from now puts us around $500,000 per Bitcoin. Kathy Wood mentioned that the other day. Mike Novogratz has mentioned that. A bunch of other people have mentioned that. That's kind of the safe case at this point, right? And then anything on top of that, if it becomes a medium of exchange, if it becomes bigger than gold, if it becomes all these other things, you can see how the price can go much higher. But I think it's interesting that he's starting to kind of separate the two from the network and the actual asset. But it doesn't surprise me necessarily.
John, what do you think?
Yeah, more people I think need to separate the asset from the actual underlying technology, and they're both very important for different things. But the correlation, I can see it being correlated based on the fact of if people aren't spending money, they're not putting their money into Bitcoin or any asset for that matter. Use it as an inflation hedge and a store of value, but it's also a medium of exchange. So you'll start to see people using it kind of as a currency, right? We'll see what happens. I think I'm obviously very bullish on it. I don't see it really. It's not really that correlated, but all the cryptocurrencies together are being correlated.
They have been very correlated, but I think we're starting to see a little bit of decoupling there. One of the pieces that some folks in the Bitcoin community don't like, some people in the long tail assets they don't like, is when you decouple these assets, Bitcoin is very clearly going after money. And when you have that strong, secure, global, decentralized, open monetary network, you can do all sorts of things with it. Store of value, medium of exchange, you can build on top of it with smart contracts, etc. That long tail of assets, though, I always go to something like NFTs, right? NFTs don't necessarily need to be decentralized. NFTs don't necessarily need to be on one specific platform or another. There's different criteria for what makes that valuable versus what Bitcoin's going after and the needs it has for decentralization and security. But that also doesn't mean that NFTs are a scam or any other way doing something that is nefarious or malicious, etc. Right? When you go to build a piece of technology, what do? You look at all of the technological infrastructure that's available. I need a database. What database options are there? What am I going to use? I need cloud computing. Okay, I'm going to use Google, Amazon, something else, right? I need to actually have this be written in some sort of scripting language. What language do I want to use? All of these different decisions get made, and they ultimately get made for either technical superiority, efficiency, cost, or familiarity. Those are the four things, right? It's either this database technology is more effective than some other database technology. It's either lower cost or it's more efficient, or it's just, hey, I know a certain language, I don't know the other languages, so I'm more familiar with it. Or I previously used that database technology, or I previously used that computing platform before, and so therefore I'm going to continue to build for it because that's what I'm familiar with. But to me, that is the big difference here, is when you separate it away, you can have monetary maximalism, right? The piece that I wrote a couple of weeks ago was monetary maximalism. Everyone is a monetary maximalist. If you live in the United States and you get paid in dollars, you save in dollars, you invest in dollar denominated assets, and you pay your taxes in dollars, you are a US dollar maximalist. Your entire life is denominated in dollars and based in dollars. You think in dollars. You're a monetary maximalist. But if all of a sudden you then go into the digital world, you may actually get paid in Bitcoin, you may save in Bitcoin, you may actually denominate the investments you make in Bitcoin, etc. And so when you start to think of this shift, is the natural end state for money is that you are a maximalist. Very few people walk around the world and they're like, oh, I have 20% of my net worth or liquid portfolio in dollars. I have another 20% in euros. I have another 20% in yen, another 20% in wands, etc. No, of course not. You have one currency. You're a monetary maximalist. And that's what Bitcoin is vying for. And Bitcoin has done that to a very, very successful degree.